Good afternoon and welcome to my YouTube channel. Be sure to hit that subscribe button and turn on your notifications as I bring to you some important levels on the overall market indicators such as the S&P 500, the NASDAQ, the Dow, and the Russell 2000. Let's get started. Before we dive into the charts, I want to bring your attention to some economic data that's coming. March 10th, we've got non-farm payroll and unemployment. And then on 3/14, we've got CPI, PPI on 3/15 along with retail sales. So with that being 3/10, 3/14, and 3/15, we've got some time before we see something major as far as economic data that could actually shift the market. So what we may end up seeing is that the market could trade a little sideways or continue a little bit further down from where it currently is. And before we get to some levels that we can look at this week coming up, let's take a closer look at these monthly candles that have been printing on the market over the last few months. So the first one I want to call your attention to is the S&P 500. If you take a closer look at these monthly candles, the last 4 months, including this month, you can see that the range that the S&P has sat in on the low side is right around 38.85, and then on the high side right around 40.90. So you got the November candle, December, January, and including the month of February. We've really traded within a tight range as far as I'm concerned on the S&P. And then we finally cleared that level. On this past week. And then we cleared that level in this month, that 41.84 level. So looking at a lower time frame, and we've been watching this channel that began to connect in March 2022. Then we saw a touch in August, a failed attempt in early December, then mid-December, a spike through to touch that 41.84. And then we finally got through it in January to only come back up again to that 41.84 level and clear it. So that was actually a new high on top of this December 14th, December 15th high. With that being said, since the late October time period, we've been making higher highs and lower lows. Now, if we put a quick Fibonacci on here from the December low up to the most recent high, you're going to see that we closed on Friday right at the 61.8 retracement. Now, I don't believe anyone that pays any attention to technical analysis felt like when we broke out of this flag here in January that, in fact, this was going to be the last retest before we took off into orbit. It was a clean retest. However, we've already come back almost to that trend line. And you can see that the 78.6 almost perfectly lines up with that economic data in that time frame we were just discussing. If we pull this back to the October low, you'll see that we're just shy of the 38.2 retracement. So some levels that you can take a look at this week for sure is getting to this 38.2 retracement, which would be 39.39 just below us. And then a little bit further out, the 50% retracements right around 38.55. And if you just want to use this tighter fib, where we currently are, or just shy of where we currently are, 39.49 and 38.78. So those are a few levels to take a look at. And to show that, hey, we might not be quite done with this downtrend that's been happening over the last year, you can see that from the August high down to this October low, this most recent retracement again is failed at the 78.6, in between the 78.6 and this resistance level at 41.84. That could absolutely mean that we break lower. Now, technically, this channel was pretty strong over the course of the last year and a half. However, we've broken out of it. It does not mean for sure that we're headed higher. We've got to deal with 41.84, breaking through, possibly retesting it on the other side, and then heading up towards this 43.2750 level that has not been challenged this year since it made the lower high back in August. It has not been challenged since that point in time. So those are a couple levels to keep your eyes on below us as well as above, which would be the resistance at 41.84, and then further out, maybe over the next month, 43.27. So those are a few levels on the S&P that you can keep your eyes on. Next up, we've got the Dow. Similar formation, downtrend, lower highs, lower lows. You can see it kind of connected almost here in April, definitely had a touch in August, finally broke through in November, a lot earlier, several months earlier than the S&P 500, broke and retested, and then now we're right back at this level. So we've traded in between this level, give or take 34,479 and 32,702. And if we go up to the monthly and do a similar kind of view that we did on the S&P 500, you'll see that since November, the Dow has traded between roughly that 32,697 and you can call it 34,572. So a high and a low there. You can see with this Fibonacci that I have on from the October low all the way up to the December high, we're sitting at that 38.2 retracement. So some levels that you can write down, 31,926 below us. And then further out, you can see that this 61.8 retracement deep into April, if we met that trend line and the retracement at the same time, would be 31,151. What's up above? Well, currently, we'd have to take a much closer look on the Dow. We'll go down to the 4-hour chart, and you'll see that we traded below this resistance level. So this could, if we look at the 4-hour, you can see that we broke below this support level. So this could turn into resistance. So this would be the first level you want to keep your eye on, is that 33,099 level. And then until we break above 34,479 or 35,228, we're really still in range. And we've been in this range roughly since November and continue to trade sideways. So those are some levels to keep your eyes on up above and below on the Dow. Starting on the monthly with the NASDAQ, you can see since, call it almost October or September really of 2022, we've traded between 12,142 and 11,027. So this candle right here, just a little bit higher on the open, but for the most part, the entire body is within this purple range. Then the same thing in October, November, December, January. And while we ran up and touched this level, 12,943, we have now snuck back into this purple range. So got some candles that traded above it, got some candles that traded below it, but you can see the resistance and support that's been created in and around this purple range that I have drawn. And then on Friday, you can see where we roughly closed on Friday just inside of this purple area. If we throw a quick Fibonacci on from the most recent low to the high, you'll see that we came up just shy of a 50% retracement right here, just shy of a 50% retracement. And I feel pretty confident that we should see that get touched this week. Nothing's guaranteed. No one's seen what's going to happen, but we're so close. I can't really see why it wouldn't happen. So write that level down, 11,849. If we pull this all the way back to the October low, you'll see we closed right on the 38.2, just about right on the 38.2 retracement. I'm not 100% sure that we're done with going down. However, if we take that opposing view from the August high down to the October low with the Fibonacci, we can kind of get an idea of what's been happening. And the 78.6 has not been touched on this particular move from August high down to this October low and back. It hasn't been touched. And so we'll have to contend with up above 12,943, 13,068 for sure. Now, let's take a look at the Russell 2000. We're going to go up a level to the monthly, and then we're going to take a look at where this trading has been happening. Now, this is a bigger range, but yet and still, this is where most of the price action has happened. Since May of 2022, you can see that doji, a nice full body candle in June, July, definitely an inverted hammer in August, another full body candle inside of September, October, a hammer here in November, another full body candle in December. And while we did come up outside of this in January with a strong bullish momentum, we engulfed this previous month candle. What has happened since then? We ran up to about 20, call it just shy of that 2025 mark that I've been paying attention to. And on Friday, we closed right at that purple, the top of the purple range. And again, we've traded outside of this purple range, but you can again see even before, here's some support, a little bit of resistance, support, resistance, support here, resistance, and then a final break and retest potentially, and support here on that purple area. If we take a look at a Fibonacci from the most recent low in December up to the high in February, yep, that was February, we broke just below the 38.2. Could we call this retracement here the final retest of this trend line that the Russell has also been in? Probably not. And you can see that we've already made a 1, 2, 3 move here. So one impulsive move down, a pullback that did not take out the previous high, and then a break below the previous low. So that 1, 2, 3 move has now landed below the 38.2. So a level that you can write down 1863 just below the current price right now, as well as this 61.8 1830 price point. What I feel is going to be very interesting is if we can possibly touch this new trend line that has 2 touches, and somewhere maybe out right around that inflation report, that PPI report, could we land about right here? Could we land about right here and make our 3rd touch on this trend line? That's something that I'm keeping my eye on. As I mentioned, just above us, we've got that 2025 level that's roughly about the August high of 2022. And you also had a push high back in December 20 that gives this some support. It's not a major level, but it's definitely something that price will have to deal with. Now, from a Fibonacci standpoint, if you take that August high down to the low, you can see that it's pretty much dealt with all the Fibonacci levels, to include breaking out of this trend, lower low trend line, higher low trend line. It really feels positive moving forward overall. Once it deals with this 2025, though, we'll be able to make a better case for the bulls. If we draw the Fibonacci from the high to the low, you can also see, and I'm talking high back in November 2021 down to the low in October, you can see that the 50% retracement sits just above that 2025 level at 2049. So that's a little bit further out, but something to keep your eye on as we get there, which means if we hit this level, we could still then turn around and trade lower than this 1640. Again, no one knows what's going to happen. We're just going to have some levels that we'll be prepared to make a move either way the market goes. Now we're going to take a quick look at the VIX and see what it's been up to. You can see it touched down right around this 18 level in the middle of February, and now we're trading a little bit higher, which correlates with the bit of a correction that we've seen in the market after a pretty strong end to January and beginning to the month of February. The next kind of point inside of this larger range is 25. As you can see, for the most part, over the last couple years, we've been between about 14 and 36, 37 overall. And then within that, 18 seems to be a number where the market reacts. 25, in some cases, it also reacts. And then, of course, at this higher kind of 35 level, we start to see a change in the market. So just something to keep your eye on and watch the correlation between that and the broader market. And for today's session, I want to wrap up with who's being disciplined. And it's none other than the powerhouse in technology, Microsoft. And what I mean by who's being disciplined, this stock over the last year, year and a half, has been really consistent at hitting its levels, hitting those support and resistance levels. I've got 293, 270, and right around 245. You can see that price has consistently respected this level: support, resistance, 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 a little bit of resistance here. You can see the support all along here. And then whenever you see like it kind of dancing around with a bunch of gaps, that lets you know there's some liquidity there that's pushing the market. And where we are currently is 249.22. That's where we closed on Friday. And you can see that we very well could see that 244 price again this week. So that's Who's Being Disciplined, MSFT. Add it to your watch list. Watch it react to these support levels that you see drawn on my chart. 293, 270, and right around 245. And remember, these are just my levels and my opinion, so you should not take these as trading advice. But if you want to know more, be sure to click the link in description. And until next time, I'll see you soon.